for global investors, we would say be very selective in China. We're underweight Chinese equities. On the currency side, we think that a lot of the tariff noise and things could be absorbed by the Chinese currency, and so we'd actually be underweight. We've had a position where we can underweight the Chinese currency versus the U.S. dollar, and I think there are opportunities around the larger banks or some dividend stocks or in the AI space and the internet, but as we work through some of these geopolitical questions, it really puts some of the Chinese market beyond rational analysis.
Is another devaluation coming if dollar yields are particularly problematic for APAC in this part of the world?
I think that some devaluation could absolutely happen. In some ways, though, the more tariffs that the U.S. does apply, the more room that China has to respond and may be forced to respond more forcefully. And I think for investors around the world, when the U.S. was in a deflationary period during 2008, they started to make moves, but you could have waited until after the TARP, after they recapitalized the banking system, after Ben Bernanke went on TV and said he had a printing press and was printing money, and then invested and still made a lot of money. And so I think investors are going to be cautious about the first few moves that China makes to really start to stimulate.